What's up, everybody? It's your boy DeFi Deuce. Just here want to talk to you about what's going on in the crypto market. Um, the market has definitely been doing a nice little pullback. And if you don't understand a few things about cryptocurrency, one thing I will share is that technical analysis and chart reading is super, super essential and important to you staying ahead of the curve and being ahead of the game and knowing when certain things are or are not going to happen with a certain degree of accuracy. You could think of chart reading as basically similar to the work a meteorologist does, where they look at different weather patterns and they make informed decisions as a result of what they see when they research these weather patterns over the course of certain time frames, whether it's this time last week, this time last year, this time 2 years ago, so forth and so on. Obviously, there's a lot more that goes into it when you're a meteorologist, but just for similarity's sake, you could think of chart reading as the same type of analytics that you can do to give you a really, really informed decision um, or opinion, excuse me, when you make decisions, just based off certain information. Now, I'm about to share my screen and we're going to go over something and I'm going to show and share why I personally have been in stable coins for the better part of what is this, January, 2.5 months now, since about November. So what we're going to look at is the total crypto market cap, and I'm going to break down some things for you. Now, this is the total crypto market cap over the inception of the crypto market as far as the time frame is concerned. And these are monthly candlesticks here. And you don't have to worry about if you aren't really familiar with what a candlestick is or what it means. But for right now, I'm just going to help you understand why or how rather I was able to make my determining decision as far as the crypto market. Okay. So let me hide this for a second. Cool. So what you see here are the monthly candlesticks. And this is going back from what you can see is March 2018. Now, what these candlesticks do is give you an understanding of what the price was at a particular point in time. What I was able to see was that we had a point right here in March of 2020 where the total crypto market cap was about $106 billion total. Okay. Now, that's significant because from that point, we went on a consecutive month streak of ascending and going upward where we had nothing but bullish momentum. So here you had 106 billion, and these candlesticks are going up month after month after month after month until you get to about right here where they go down. Then they start going up again, and now they're coming down again. So what was alarming to me is that We went from a $106 billion market cap, let's just call it $100 billion, to topping out at a little bit more than $3 trillion. And what was this? November of 2021 was when we hit 3 trillion. So if you walk with me here, from March to March, it's 12 months. Then you have 13, 14, 15, 16, 17, 18, 19, 20. 20 consecutive months from here where the market cap went from $100 billion to a little bit more than $3 trillion in less than 2 years. Now, I can let you know exactly what that increase is percentage-wise. Ladies and gentlemen, that is a 2,654% increase in 20 months. Okay. Now, that may not seem like anything to you at the moment, but I'm going to help you understand why that was significant to me. That was significant to me because once we kept ascending, as you can see here, we were never in a situation where we had any type of significant pullbacks to retest the areas of past support or resistance. Okay. Now, what I mean is we went up here, we came back down, and then we bounced back up, and now we're coming back down. But we never at any point in time retested any of these areas down here, down here, down here to make sure that we had the support to continue this parabolic increase or uprise that we saw from March 2020 to November of 2021. So with that being said, this is where the chart reading comes into play. Now, generally speaking, when an asset reaches a all-time high or any type of high period, it typically retraces to a certain area. Now, we're going to look at, just on a basic level, where I saw these areas to be. Now, generally speaking, what we need to understand is that any type of derivative market, stock market, crypto market, forex market, what have you, generally speaking, responds to something called the golden ratio or the Fibonacci sequence. Now, without getting into too much of an over explanation, the Fibonacci sequence basically dictates that when a asset reaches a high, it is going to pull back or retest certain areas to make sure that it has the support to continue moving forward. Now, generally speaking, these areas are going to be anywhere between the 618 and the 382. Now, what we can see here is that the total crypto market first initially went here, then came down and tested this area here, and then bounced back up and came back down. So why is that significant? because the asset, once it reached this high, came back and retested this 382 right here. And I get that number from right here. And this tool is a tool in um, TradingView called the Fibonacci retracement. And it's very, very beneficial in helping you easily identify support and resistance according to the Fibonacci retracement. However, you also want to additionally do your support and resistance manually so that you can understand all of the areas within or between these retracement levels so that you can have a more broad picture painted for you according to what's actually going on. All right, so again, right here, we touched the high and then we came down and retested the 382. It found some sort of support enough for it to go back up and establish a new all-time high here. So we went from an all-time high here, tested down, and established a higher high here. Okay. Now, what this asset, I'm sorry, what the market did was one phase at a time, it retested each one of these areas to see if there was support there to continue moving up. And each time it failed. So you can see here that it first attempted to retest the 786 and it did not have the support. So support became resistance. And we now began testing the 618. Same thing occurred. The support was not there, so support became resistance. And now we're testing the 50. This is the area that we need to hold in order to have any type of hope that this bear market is going to change. In the event that we do not hold over 1.57 trillion, the next area of support is 1.22 trillion. And my humble opinion, again, this is not financial advice, is that we will eventually retest between the areas of the 382 and the 236, which is 1.2 trillion and 1.19 trillion. Okay, so be aware, be prepared. And this is just one of the ways in which you can be ahead of the curve as far as knowing whether or not the market is bullish, where it's going up, such as you see here, going up from here, touching here, or whether or not this is a bear market, which we have been for the last 2 consecutive months. Excuse me. The only thing that we can, generally speaking, have some type of confidence in is that we're still trading above the 20-day moving average, which according to this is about $1.5 trillion. So the areas we want to be aware of are the 50, according to the fib retracement, and the 20-day EMA, which is 1.5 trillion. If we do not hold above those areas, then logically we could expect to pull back to the 382. If that does not hold, we could expect to first test the 50-day moving average, which according to this is 900 billion. And then if that doesn't hold, we'll be retesting the 236, which is 800 billion. So just a update of what's going on in the market so you can be aware and make informed decisions as we navigate through this. Again, this is not financial advice, just one crypto enthusiast sharing his thoughts with another in regards to what he sees so that we can all make more informed decisions and hopefully not lose as much money. All right. So thank you for tuning in, and until next time.